So you're a cash person. You first want to figure out how much money do they need to show in taxable income. Let's start there. Figure that out, back into it, right? Like how would we back into it? Do y'all know how to back into figuring out how much income someone needs? I'm just going to do a run-of-the-mill person. They have a car payment. What's a good car payment? 400 bucks. Awesome. They got student loans. What's an average student loan payment?
300 bucks.
Woo-wee. Private schools. Quit going to private schools.
130.
There we go. That was my student loan. I owed like 12 grand or 14 grand. Sally Mae. Sally Mae was my girlfriend. I paid her a ton of money. She didn't give me anything in return.
Listen, this morning,
All right.
I saw
400 car payment, 175 is their student loans, and they have 2 or 3 credit cards. Each has a couple grand on them. Why not? Let's be American. If we're going to do it, let's go all in. Let's go all in, right? But minimum payments on each of those credit cards is how much per month for each?
like 35, 40.
35 bucks, 50 bucks, 75, maybe 100. So let's just say they have 100. Let's do 175 in credit card. Not about it's minimum payments. Like you do know if you just make the minimum, you're not paying your credit card off. All right. So luckily there's no alimony, there's no child support. But we did ask that question. Hey, by the way, are you obligated to pay alimony, child support, or separate maintenance? Anyone know what separate maintenance is? Separate maintenance? Cool, neither do I. I've asked that question for 16 years. My assumption, it's in states that recognize separation, which by the way, Florida does not legally recognize separation. You're either divorced or you're married. Or you're, I guess, never been married, right? But in maybe some states, there's some kind of monetary agreement when you're separated that one spouse has to pay the other. But one of the questions for ages on the 1003 was, are you obligated to pay alimony, child support, or separate maintenance? But in this case, we asked that question and they said no. All right, so 400 plus 175 plus 175 is 750, right? Anyone disagree? Well, 175 plus 175 is 350. 350 plus 400 is 750. All right, cool. Ma'am or sir, when you sit down and you do your monthly budget and you look at your housing expense, what is it that you're comfortable paying each month? And before you answer that question, Travis, comfort monthly payment to me is not just the principal and interest, but also things like homeowners insurance, real estate taxes, in some cases mortgage insurance, and in some cases homeowners association dues. I call this your whole kit and caboodle, all in. What is it when you sit down and do your budget that you're comfortable paying? $1,300. All right, so you are looking at roughly $150,000 property, depending on how much money you're putting down. I just know that from experience. But we're showing him how he's going to help this client who works gig work. Maybe they're a Taekwondo instructor, right? Maybe they're an Uber driver. Maybe they're, I don't know, they work all on tips. Somehow Travis has someone who only gets paid cash. They work the pole, work the corner, what have you, right? As long as it's legal and they pay taxes, what do we care? Someone help me out. 750 plus 1,300 equals how much, Asia? 2050. So I know that's what's going to be their monthly debts, right? Because when we qualify someone, do we ask them how much they pay in groceries? No. How about cell phone bill, cable bill, internet, car insurance, cell phone? None of that, right? None of that's applicable. The actuaries, who by the way, they're really smart people, real geeky number people, right? Actuaries work for hedge funds and life insurance companies. They basically figure out the probability of how long each of us is going to live and what's that's going to cost, and they run these crazy numbers. So an actuary has already figured out on behalf of the mortgage industry that when we talk about maximum debt to income ratio, that people have life expenses, whether it's daycare, groceries, utilities, etc. So when we say we can qualify most people to a 45% DTI, all that's factored in. And is that 45 back end or front end?
Back end.
What's the difference between back end and front end? Anyone not know? Or not remember? But if you don't know, write this down. Your front end ratio is your housing payment divided by your gross income. So people like Clark Howard, Susie Orman, Dustin Owen, they teach, like I threw myself in there on purpose. Yeah. They teach that 25% of your gross income should go towards housing. No more than. That's near impossible if you live in California or New York City, and possibly even South Florida. That 25% of your gross income, and some of those markets 35 to 45% goes. But your front end ratio is solely housing divided by gross income. Your back end ratio is housing and everything else. Child support, alimony, car payments, student loans, credit cards, divided by. So we tend to talk a lot about back end. But no, the front end ratio is important. It's just not as important as the back end. So if I know most borrowers I can qualify up to a 45% back end ratio, Travis, this is your scenario. If my consumer's debt is currently $750 and they're comfortable with $1,300, that means when I take their gross monthly income and I times it by 45%, it should not, the number I get should be this or less. Okay, so I'm gonna teach you some really cool math. Who has their calculators with them? Take $2,050, or $2,050, divide it by, what? How do I denote 45% as a decimal?
0.45.
Yeah. So divide it by 0.45. What's that number?
4,555.
Yep, so Sam, let's do this again. 2050, I want Sam to get this, divided by 0.45.
Oh, I did time, sorry. Got it.
Yeah, what we're doing is we're reverse engineering this. We're going backwards. So what's the number?
4,555.
4,000.
555.
All right, cool. How much is that annually? Hurry up, not Jimmy. Someone tell me quick. 5, 4, 3. How much? 51 grand. I don't know. I'm gonna guess 51 grand. How much, Jonathan? 54. Yeah, so I was off by $3,000. Look, my quick math doesn't necessarily always get the closest number. All right. So Travis, in this case, hey dude, when you and your CPA sit down, I'm thinking in order for you to qualify for $1,300 a month and still carry your current debt, I'm gonna need you to show that you earn about 54, 55 grand a year. I would say 55, I wanna round up, right? But like that's how you could be a great advisor to that client, is your ability to figure out what's your comfort monthly payment, what's your current debt load. Now, if this is an FHA buyer and they have good credit, like 680 or better, I can maybe get them to a 55% debt to income ratio. So let's do this. If I could qualify you at a 55% debt to income ratio, what would then your income need to be in order to qualify? Ooh, Tyler, how'd you get $3,700 a month? Divided 2050 by 0.55. So what was that number now?
37.
Hold on a second. 37. 27. So Sam, and I like to double check my work. All right. So now get out your calculator. Take 3727 times 0.55.
$1,049.
Yep, 2050. Yep, cool. So now, Travis, if I know I'm qualifying this dude not conventional, but I'm going FHA, maybe I tell him he needs, Jonathan, 43,000 a year? What is it? Is it? Yeah, I just did the quick math, but yeah, 43,000. Cool. Now, I didn't geek out on him, but if I wanted to geek out, and for your scenario, so his scenario is he has someone who hasn't filed their tax returns. They made a boatload of cash last year. So they could be as honest or dishonest as they plan to be. Dishonest, they tell the government they made $14,000. Honest, they tell the government they made $48,000. But they should take advantage of every tax benefit that's afforded to them. But I can share this knowledge with them. Hey, Let me teach you how my industry calculates your income.